Hey traders, welcome to Charts and Coffee. We've got a interesting week underway because it's one that has not been dominated by data. So we've got a week where obviously Monday was the bank holiday. We have the inauguration, and going forward from that, purely from a trading perspective, going forward from that, what we're seeing is mostly political type news dominating the market action. And let's not forget, I would put the FOMC under a similar sort of category of macroeconomic, but still it's a handful of people making decisions that are affecting the way in which we might be bullish or bearish. That's it. We don't need to make any more drama about that than perhaps it already is. We just look at how it lands on price action. Gang, that's what smart traders do, right? The dullards are out there arguing and talking politics. Let them have that, right? You and I are here because we're focused on managing risk and trying to find some trades that will continue to follow through in this particular environment. And that just happens to be the environment that we're in. Now, in terms of the light economic activity, there is not a lot of data to be dealing with. In fact, just two things kind of caught my eye for this week. One is the Bank of Japan is on Thursday, so that's tomorrow. And two, there's a revised University of Michigan data, so that's going to be the consumer sentiment as well as the inflation expectations. And those are potentially two events that could be perhaps, I wouldn't say major needle movers, but fairly important. In the meantime, let's take a look at the chart that's on the screen right here. This is from Koyfin, Koyfin, and this is the normalized performance for January, 22 days in. This is where we're seeing of the major sectors. So when I refer to something as being a major sector, what I mean is that it's weighted heavily in either the NAS, the Dow, the S&P, or the Russell. Sometimes there's some overlap. And when you're taking a look from top to bottom of energy, semiconductors, industrials, regional banks, financials, healthcare, that's consumer discretionary, technology, and communications. The only thing that's really left out here are transports, the XL. I kind of overlaps with the IYT a little bit, but these are the major sectors. And what's really interesting to note, when people talk about participation, right? Who here watches participation of hands that I can't see, right? If you're watching participation, you don't need, in fact, it's not even useful to use most market internals. I know, Rog, you're going to start with the heretic talk. It's true, right? Most market internals are not measuring the indices for the way that they are made up. So we look at this. Why not just look under the hood of what these indices actually are? And you'll see here that everything that matters, right? The sectors that are weighted heavily within the indices, again, Dow, S&P, NASDAQ, Russell, are all above zero. There's risk appetite right now. Is it the uptrend of last year? No, it's definitely not. But when you look at month to date, things are fairly positive. Now we can add other industries, we can add other sectors to this group, but they're not going to be as impactful, as important as what we're seeing in the ones that I've listed here. So check it out. If you're ever curious about relative performance, what sectors are leading and lagging, in other words, which ones are the strongest and weakest, right? You'll see that right now at the top of the list is energy, followed by semiconductors, industrials, and regional banks. And then the next question might logically be, what indices, and even more granularly, what stocks benefit from this? So if I've got energy, immediately XLE, I'm going to think, well, crude must be strong, or at least it should be above certain levels to allow energy to rally. One of the discussions we had in the Sector Secrets Mastery room yesterday was that I am looking for outperformance in stocks within the XLE and stocks within XOP, even more so than what I'm looking at in crude oil. We got the coffee mug today. Well, not even a coffee mug. What is this thing? Oh yeah, it's a Yeti, but pretty nice. Keeps the coffee cold. Rocking some cold coffee. Cold coffee this morning. I know, cold coffee, Rog. Isn't it cold enough for you? I won't lie, I'm in Florida. I won't even say what the temperature is, but it's cold for Floridians. I hope everyone out there is staying safe and warm. I saw a shot on my Instagram this morning of Pensacola, and it had, I don't know, 4 inches of snow. Mind boggling. Stay safe, stay warm. Stay indoors. What better sport than trading to have in weather like this? Okay, so when we're taking a look at XLE, this is Chevron. This is Exxon. These were conversations we were having in the mastery yesterday. So rather than going with crude oil or even USO, let's take a look at the outperformers. 2 other stocks worth mentioning would be ConocoPhillips is actually pretty strong. Occidental, EOG, actually more than 2, and Williams. These are some of the stronger names. Chevron would be of the 2 heavyweights in the XLE ETF. Chevron is actually looking better than Exxon. All right, then you move on to semiconductors. Find the relative outperformers there. It benefits the NASDAQ. By the way, XLE benefits the Dow and the S&P, pretty much, period. XLI, that's going to be benefiting the Dow. KRE, this gets interesting. That is the regional bank ETF, and that's heavily weighted within the Russell. Keep an eye on the Russell. If KRE is on the move, that should help that group. And then you've got, the rest of it kind of in the bottom half of this list. Again, everything's positive. So it's easy to get sour. It's easy to start listening to the naysayers. By the way, who were vocal all of last year and who were wrong all of last year, right? So it's always going to be something that you and I are going to have to deal with, which are those constant bears who are just trying to get your darn attention. Gang, real trading analysis and real trading is kind of boring. Find the trend, follow the trend. There you go. It's a 4-second video. But if you want to grab people's attention, if you want to rile them up, right? Start giving your crazy low estimates for the crash that's coming in the S&P or the NASDAQ or the Dow or whatever else. So, it's a different perspective. I'll just call it what it is. It's historically wrong, right? So I'd rather be on the historically right side of trades because I want to make money, as do you. So be careful because you're going to see a lot of that bearish talk. So let me open up a few things here. So you might say, Rob, how do we know if things turn around? Yes, we know you're bullish, and look, I'm unapologetically so. I like that rising tide. I am a rising tide trader. I am optimistic. I've never, ever, ever met a wealthy pessimist. They just don't exist. So now if I take a look at the daily and the weekly time frame, the weekly time frame is continuing higher. So if your time horizon is longer, and we did a lot of this discussion yesterday in the free video, so the very channel you're probably on over at Simpler Trading's YouTube channel, you'll see I have a focus on process video. Gang, we always focus on process. We don't focus on the news. We're not focusing on the meme stock of the day. We're not even focusing on whatever our favorite indicator is. Focus on process. And process will tell you, not only do we need to choose which symbols we want to trade, this is very much going to be a stock pickers, index pickers market. We then also want to choose which time frame we want to engage, which is why it's a terrible idea to say, I trade this stock. That's my favorite, right? Or I am a day trader. Be careful with your I ams, because if you're focused on a 5-minute and a 5-minute only, you're going to miss out on some really great examples longer term, right? That could be daily, that could be weekly. So keep in mind, it's not just about the symbol, it's about the time frame you're trading the symbol on. And I went into a lot of detail on that in yesterday's free video, because I want everyone to kick butt this year. There's no reason that we should not be able to find opportunities, but we have to temper our expectations because this will be a different environment than Q1 of 2024. All right, that being said, take a look at the S&P. If you're ever concerned that, Rog, if we do turn bearish, right, how will we know? Really simply, we're going to find that 2 things have got to happen. First, we have to start printing red candles, and at least 5 in a row. 5 is my number. That's 5 trading days. So how many times do we have a string of either green or red candles that exceed 5? Not very often to the downside. Here is 1, 2, 3, neutral, right? Red, 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 yellow. Red, red, red. Oh, okay, wait a minute, Rog. There's 5. And then what happened? Neutral. It does not tend to last very long. Now, by contrast, if I were to show you the steady stream of green candles and how often that dominated last year, you'd see, gosh, there was a direction, there is a bias, and it's to the upside. Makes sense. We were waiting on rate cuts. What about now? We went from neutral now to bullish. And we're only 2 candles in, so I'm not going to make too much of it. But we have a really simple rule in the Sector Secrets Mastery. If the candle on the daily time frame, on the hourly time frame, or is red, so these are swing trades. 1 hour is short term, daily is longer term. If they're red, no long calls. Long puts are okay. Staying flat is a position, but no long calls. And then the opposite is true with green candles. These are top tier candles. They paint for a very specific reason, and it's participation and price. If it's bullish, it's green. If it's bearish, it's red. If it's neutral, it's yellow. So once we go green on that 1 hour, on that daily, I'm not allowed to buy puts anymore, right? And nothing works all the time, right? Are there red candles that if we bought calls, we might have seen a gain? Sure, but I think a lot of traders get hurt by the exception, right? That one time I broke the rules and got rewarded. That one time I ignored the guidelines and it worked. And therefore, what happens is once you break the rules, you have no rules, right? You have no rules. And once you have no rules, well, tick-tock, now you have no process. Now you have no way to measure what's working and not working, right? And if it's not measurable, then there's no way of improving. Zero, right? So those are the reasons why we want to stick with the process. We have to know the process, right? What's your framework, right? How are you frameworking your trading? What is your day trading framework? What is your trading framework, right? What is that approach? And then stick with it. And if you need to tweak, great. But I think for a lot of traders, they're sort of jumping processes all the time. Oh, over here seems to be working really well, kind of shiny and sparkly, and off they go. And, good luck. It's just not going to get you where you want to go, right? Okay, so let's see what else we have here. NASDAQ. Let's take a look at the NAS. All right, so the NAS spent the least amount of time with red candles. It spent the least amount of time bearish. Take a look at that weekly on the far right. Continue to march higher. Take a look at the daily. Again, green, yellow, 3 days of red. Did I ever get bearish the NASDAQ? No, because I want 5 days in a row. Now that's on the daily time frame. Might there have been some shorting opportunities on the 1 hour? Perhaps. But do you see that even in an environment where we got choppy, what side is going to benefit, in terms of the follow through? The long side. Because we had mostly green, a handful of neutral yellow, and a total of 4 red candles, right? Look for yourselves. I don't want y'all just saying, okay, Rog, take a look for yourself. Maybe if you're watching this on replay, pause it and say, yeah, look who's outnumbered here, the bearish candles. And yet that's the thing that gets our attention because our lizard brain is always looking for the thing that's going to try to kill us. All right. So, keep in mind, don't paint the entire market with one brush. Now, bearish, legit bearish, the Dow. If you wanted to get bearish, if I wanted to get bearish, Russell and the Dow were 5 red candles and it made sense and it followed through for a handful of weeks, right? Because the structure and the candles were there. So Russell and Dow were, past tense, bearish. We could see that coming, right? 1, 2, 3, 4, 5. So by the, as you can see there, 24th, so Christmas Eve, we had a downtrend. We were bearish. I shouldn't say we had a downtrend. We were bearish. We had a downtrend come the 6th of January. So bearishness comes first, that directional bias shifts, then the trend follows. Now, what do we have? First green, right? Now our second green. Can I buy puts anymore? Only if I hate my money, right? On the daily time frame anyways. So those are things to keep in mind. I mentioned that there's going to be a lot of kind of political news that's going to overshadow even a fairly busy earnings week. Abbott, Halliburton, Johnson & Johnson, Procter & Gamble, Travelers, Texas Instruments, American Express, Verizon, heavily weighted names in important sectors. We do have some earnings, but that's really being overshadowed mostly by a lot of the news out of some of the decisions from an incoming administration. That's a 4-year cycle, gang. Don't politicize it. It's a 4-year cycle. So now I take a look at crude oil. There's a supply story that's starting to make its way into crude. So if the idea is that we could see more supply, whether that be OPEC opening the spigots, whether that be more drilling in the US, whatever it is, what is it? If just reduce it to the most black and white definition. Is it supply or is it demand? Supply is typically going to be bearish to price of something like a commodity like crude. Demand is going to be bullish, right? Now, you can have increased supply and increased demand. But at the end of the day, OPEC is the central bank of crude oil. And they're probably going to be the most influential here, right? Because they can always try to offset any country trying to increase the output. But the next part of that conversation is, so please don't glom onto the news because there's so many layers of it. So if we hear, oh my gosh, there's going to be more supply, the second question is, does that supply hit the market? Or is it simply going to go into reserves, right? You can increase supply, but it doesn't hit the market. So these are all things that once we hear the news, just be aware, but then look at price action to really see if that's the way it's playing out. Crude oil's in an uptrend. Now you can ask a little bit deeper a question, and these are not high level theoretical, PhD, economist level questions. Who benefits from perhaps more exploring and drilling? Oh yeah, the oil companies do. And that's why we're going with things like, hey, in a game of trade this, not that, let's go with oil companies and maybe put oil on the back burner, right? These are all things we can do. And, just ask some basic questions rather than read the news and panic, which is what most of your average retail trader and investor does. Oh my gosh, buy, oh my gosh, sell. And then they wonder why they can't get a nice steady P&L. Right? It does require a little bit of planning. I don't know about you, but it's rather insulting to think, you and I are spending at least 20 minutes, an hour, 2 hours trying to get our portfolios and our trades in such a way that we can manage risk and grow our accounts. And then there's someone who thinks they're going to watch TV for 3 minutes and compete with us, right? I know what you're thinking. Good luck to them. And I agree with you. Does it take a lot of time? No, I think you could do most of your trading and investing life in an hour or less, depending on the time frames and the approach that you want to take. But it does take a little bit of effort. It takes a little bit of homework, right? And if we know what to work on, we know what to block out, we know what to focus on process, we can do it, right? It doesn't have to be an all-day thing. By the way, it's not an all-day thing for me. I don't sit behind these screens all day. Absolutely not. So I mentioned within the XLE, there is a strong stock, and that would be Chevron. It's stronger than Exxon. Take a look at the number of green candles. Oh, wow, this is kind of getting easier. Right, I mentioned Williams. Take a look at the number of green candles. I mentioned Occidental. Take a look at the number of green candles. So I like Chevron to tag along with XLE because it's heavier weighted, right? I mentioned ConocoPhillips. Same thing, right? So if we can focus on that first, we can start to find better opportunities where the follow through is most likely. Yeah, that's always the job. All right. So there are plenty of other stocks. I'm just mentioning some of the more liquid ones where the option chain is liquid and heavier weighted. This is by no means, a thorough and exhaustive list. There'll be a lot of other names that'll benefit. So please know that. And then, go ahead and start treasure hunting, looking for those opportunities that are in alignment with the sector and or the commodity. In the meantime, another way to tackle this environment right now is shorten the time frame. Whenever there's uncertainty, there's actually, interestingly enough, 2 time frames that do really, really well. Short-term day trading, which I like to do in a 5-minute time frame, and longer-term weekly, where it can absorb a lot of the potholes along the way. So sometimes the potholes are the opportunity for a day trader, and the weekly has just better suspension and can absorb them. So think about, again, the time frame you're trading. And if you're finding right now, hey, Rog, this is a little outside my comfort level. This is a little outside what I've been dealing with for the last, 12 to 14 months. I do want to mention, and this is coming up, so I do want to make sure everyone gets this on their calendar. We do have on the 5th of February, that's right around the corner. I'm working up some of the trade results from the Sector Secrets Mastery, working up some charts, working up some more information as far as how I'm going to be tackling 2025. The process remains the same, but we're nimble with the watch list. And we might have to deal with a little bit more rather than trending emphasis, like I did last year. I'm going to shift gears and use another set of tools in my toolbox and focus on maybe how do we take advantage of chop? What are those tools? What's the best way to confirm it? How do I know if I'm in chop, right? Those are the kind of things we'll be diving a little bit deeper into. That'll be on the 5th. And I should put in the time. It feels like it's so past my bedtime. I'm a early riser and early bedtimer, but we're gonna stay up late and get crazy on February 5 and start talking about the markets. 8 p.m. by the way, Eastern New York time. You can register over at simplertrading.com/ I love that word, consistency. Okay, gang. I'll see you tomorrow. Same time, same station.